like top to bottom, from the PSYOP to the charts.
Okay, I'm excited to hear this.
So
it's a great first episode to do.
I might as well drop this today.
Yeah. I think this is still sharing. Yeah, it's still live. Okay, thank you very much, guys, for tuning in and watching. This is our new show. It's called Technically Speaking. It's going to be a complete technical analysis show. It's headed up by our head of trading, Mr. Spectacular. So get used to his voice. We're going to be doing market analysis. There's not really a day that we're going to be doing this. It's just going to be every now and again. Just going to look at the markets, do some TA. That's about it, really. Are we going to be doing anything else in the show, Lucas?
Just dropping some absolute alpha.
Yeah, baby. Get that alpha, bro. Get that alpha. So yeah, if you want to find out more about what we do and you want to start trading, this is our website, Blockchain Sensei. We're happy to teach you how to become a trader either in stocks or crypto. We have a signal service system as well, where we will send you 20 trades a month for you to trade on the Binance system for crypto. That's pretty much what we offer. So if you're interested in trading crypto, just go to the website, click on products, and click on the crypto swing trade signal service, and it will take you to our Gumroad. And as you can see, £20 a month. You're going to need all trades are sent out on WhatsApp. You have to send your WhatsApp to the Blockchain Sensei Instagram or email it to us. And you need to use Binance. We're going forward with the level 2 service we're going to have coming, where we're going to be shorting and doing stocks. You're going to need to use FTX. So that's pretty much that. You're going to see notifications on our Twitter whenever we're going live. So be sure to follow the Blockchain Sensei Twitter at Blockchain Sen. So let's get into it. Shall I let you share your screen? Should let you do it.
Yeah, whenever you're ready, bro. So first, I'm just gonna lay a basic foundational understanding from the psychology standpoint as to what we're going to talk about, and then we'll dive into specific example on the charts for how it's being implemented. Let me just put my my video on. So we are playing a game essentially with crypto, the markets, and we're playing against guys who are very advanced, who've been doing this for years, who have considerable teams, resources, both from the standpoint of intelligence and capital. And we are competing against them. So how the whales play the game is, one, from the mental standpoint, and it's not to do with their mentality, it's to do with influencing our mentality, and then implementing certain moves with price action to get us to make decisions that are not in our favor but instead in their favor. So a lot that is sort of like a common practice in cryptocurrency, I would consider just a plain PSYOP by the whales. For those of you that are unfamiliar with the term PSYOP, it's a military term. It's to do with psychologically influencing your enemy to take steps that will benefit you. So let's relate it to martial arts, to jiu-jitsu, which is one of the things that I do. When you're on a white belt level, when you're a beginner, your moves are very clear, very easily telegraphed. So it's very clear what you're going for, and it's very easy to defend that. And So you're essentially playing a game of, I make a move that's very obvious, you defend that very obvious move. The higher you progress up the ranks, the more it becomes of, you make a move to initiate a reaction from your opponent that will then expose you for going for you actually wanted in the first place. So you get them to give it to you, not by forcing them to, but by influencing them to take steps which are in your favor. So stuff like buying the dip. Not, in my opinion, not all dips are for buying, because if you even look at, well, we're not out of the dip we're in now, but if you look at the May dip, it dips, then it goes down further, dips again, dips again, dips again. So why would you buy the first dip if you could have bought the last dip? If that makes sense. So when you buy the first dip, especially of a major peak, you're essentially exit liquidity for the whales. We'll get to that in the chart. Same with just hodling and diamond hands. It's like, we don't want to hold this stuff forever, for eternity. Yes, you want to have a certain level of, what's the proper word? Certain level of just grit, where you're willing to take certain short-term dips in your portfolio, but overall you don't want to be in a trade forever. You want to hold it to a point where you've reached your targets, and then you get out and you get to something else wherever you spotted an opportunity. So I'm going to share my screen now and just go through an example of how the whales operate. So Michael, do you see my screen?
Yep.
Perfect. So that's just a random chart of an altcoin, but these patterns play out quite frequently. So first, the price is not really doing much. It's in a range. There's a tiny bit of a sign of a possible pump, but it doesn't really go anywhere. So it keeps just ranging, keeps ranging. That is where the whales are accumulating. That is where they are loading their bags and setting up for what's to come. So then we get a test bump. So price goes up, hits a new significant peak, doesn't really hold very well, and then it goes down. And what we have is a bear trap. So people might think, okay, this was it, I'm gonna sell, so in case it goes lower. It doesn't, it goes back up. And let's also remember, most people who are trading crypto, they're losing money, they're not profitable. So if you can get an understanding of how the whales operate, you don't have to compete against the whales. You just have to think like they think. You have no chance against the whale. However, you have a very significant advantage against your average retail investor who has no clue, who hasn't put in the work, who has no access to this material, who hasn't bothered to search for it. If you operate like the whales do, it's game over. So from the standpoint of your average retail investor, okay, game over, I'm getting out. Boom, it pumps again. So what's he thinking? Okay, I should have bought in, I should have held, or I should have bought more. He'll buy in here. He probably won't buy around here. He'll buy another top. Okay, now it dips. It went down. So sell again at a loss. Now the price goes parabolic, and it prints a very, very high peak from where we were initially. Now, as you can see, this peak doesn't hold very, very long. None of these candles have closed at the peak level. In the case of these, the wicks are so massive that the price essentially almost closed at the same level that it was at. But what it does is it puts a very high value on this asset now. So when we dip down to here, it looks cheap. It looks like a good deal. And then you'll see all the tweets, buy the dip, I bought the dip. So some of the whales will drop a percentage of their bags at the top. But when you trade with massive amounts of capital like they do, there's hardly any liquidity for you to be able to get out at this point.
I think an area that people don't realize. I think the liquidity issue is a thing that,
yeah,
I guess you wouldn't even know about it unless you're deeply in the game. I think it's safe to say 99.9% of retail traders don't even know that liquidity is important until they're holding an asset that they can't get out of.
Yeah.
Until they get burnt, that's when people go, oh shit, this liquidity stuff's important.
Yeah. I'm in a Discord group with some guys that are doing pretty big numbers, and one of them was sharing how he's got a friend who invested in some meme coin, invested like, I don't know, $5,000 maybe. At its peak, it was worth over 2 million, but he couldn't get out because there was no liquidity. So he ended up writing it down to about 70,000, which still, if you go from 5 to 70,
still good.
It's a good ROI, but it's not millionaire status anymore.
Yeah, I see that happen all the time. People posting like, we get messages all the time at Blockchain Sensei when people have got a meme coin, and then they're on paper they're a meme coin millionaire, but then they can't get out.
Yeah, you can't sell. Because wherever, I think people slightly understand it more in the case of NFTs, because you're just trading individual items. But for every time there's a seller, there has to be a buyer. So wherever price point you buy at, you need to be thinking, why is this person selling to me?
Yeah, like who is gonna buy at the top?
Yeah, but like, that's what people do. They see how much this thing has gone up. They're like, wow, this is on a roll. I need to jump in before I miss out, and then it tanks.
I would say that even with the meme coins, riding it to the very top makes it almost impossible for you to get out, because the less likely you would buy at the top, especially if you're new, that means people that know what they're doing definitely ain't going to buy your shit off you.
Yeah.
So, yeah.
And also, if you were to, I mean, obviously this is just a screenshot, but if we looked at an actual chart and we switched to different time frames, this peak probably held for a couple minutes. And if you look at coins like even the recent Shiba pump couple months ago, the peak was short. It was and game over. So if we look at the chart again, actually no, let's go slightly just back for a second to the case of the buyer and the seller.
Yeah, because I want you to go over this reaccumulation phase, because that is the golden phase that nobody takes advantage of.
Yeah. We'll go for all this, and then we'll take care of all of those as well. But if we talk for a second about the case with the buyer and the seller, every time you buy a coin, there is a seller. So if you think you found the next 100x coin and they are happy to sell it to you, why would they sell? Why would they not hold and get those 100x's themselves, unless they believe it's going down so they can buy it cheaper? So if we talk about our initial buy the dip psyop, they're happy to sell. They're happy to sell to you because they're betting on it going down. You never want to be buying from someone who's happy to sell you an asset. You want to buy it when they are forced to sell, either when they got liquidated or when the price is so down from the peak, when they're in such despair that they're just like, just get me out of this. I don't want it. At the end of the day, this is warfare. This is either we make the money or they take our money from us. This is not we're all going to make it. That's another side. It's impossible. For somebody has to hold the bag, because if there's no such thing as a self-sustaining system. Even Earth requires energy from the sun to function. As soon as the sun goes out, we're finished.
Yeah.
Hopefully not anytime soon.
Where what you were saying about jiu-jitsu is so relevant. And I think jiu-jitsu is the perfect game or perfect thing to do to understand whales and what they're doing. Everything is a move to make you think that you are doing the right thing, to make you go, oh yeah, if I go here, I can beat the whales. No, stop trying to beat the whales. If it's kind of like having a master sensei that's been doing something, jiu-jitsu or martial arts for 200 years, and you've been involved for 6 months, and you think that you're going to beat them. No, they're going to do a move where they're like, yeah. Oh, you're going to think you've got your master in a chokehold. But then really what's happened is he's actually put you in a position to break both your arms and disable you permanently. And then you will never be able to fight ever again. That's actually what they do. And I think this is what we are all going to make it is a great example of. So yeah, don't try and fight them. Just learn from them. Just see what moves they make and try and make the same moves. And then that way you become a master and a sensei yourself.
Yeah. Jiu-jitsu, chess is another good one. Poker is another good one. So at the end of the day, we're not trading charts. We're not trading candles. We're trading human psychology. It's like there's a saying in poker, you don't play the cards, you play the man. So if we look at the chart again, we've had a massive peak. The only purpose of that peak is to print a ridiculous high. It's like if you're buying something at Gucci, first they're gonna sell you the $3,000 suit. They're gonna try and upsell you the bag for $1,000 because you've already spent $3,000. So $1,000 seems insignificant.
No, it's even worse than that. They'll go, oh yeah, being if you spent $3,000, why don't you just get this little purse for 400? You never came in for a purse. You don't need a purse, but now you're buying a purse for a girl that you don't even have.
Yeah. So when this high is printed and it takes a 40, 50, 60, even 80% dump, by contrast, this looks cheap. So then the PSYOP comes in. Buy the dip. Guys, buy the dip. And as the retail starts piling in, buying the dip, bringing in liquidity, that's where the whales get out.
And they get out, wait, let me just do an annotation, from their original position here.
Yeah. They all bought down here. They didn't buy over here. They are sitting on 1,000, 2,000x from where they entered.
I think people,
all they care is
the news reports start coming out about here and here. But
yeah.
they've already been in for like a year, 2 years. And I think that's the bit that people often fail to realize and remember is the whales control the news. Like if you're getting news, it's late. It's already happened.
Yeah. Plus, in crypto, like in stocks, you can't do insider trading because it's regulated. Crypto's not. So whenever there's some major news coming out, the big boys knew about it days, if not weeks before.
If not years.
Yeah, if not years. Or if not, they are the ones in control of the news. Because if you control information, you control perception. So that's where the whales get out. That's where they dump the majority of their bags. And we see the price going down, 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 until it reaches the capitulation level. That's where whoever bought the top, whoever bought here, thinking, okay, it's coming back now. They are at such a loss. And if they were trading the derivatives, their stop losses have been liquidated so long ago. They're just like, I'm done. Like, just please take this thing off me. I don't want it. My wife said she's going to kick me out if I keep holding this stupid coin. Just take it from me. That's where you buy. And that is where the whales start buying again. That's where they reaccumulate. And let's also remember, even if they still have some of their position, they're still up 4 or 5x from where they originally got in. So they have liquidity forever. And then the cycle repeats. We have another test bump, dump, bear trap, peak. That's how they play the game.
Guys.
And with altcoins and really tiny market cap projects, they have to do this. That's the thing. They have to do this because they have so much money. And the market cap is so tiny when they get in, they have no option but to play the game the way they do. They have to do this.
Otherwise, they can't get out.
Yeah. So if their main purpose, they're not here for charity. They're not here to make you rich. All right. They are here to generate profit for themselves and their investors. That's it. So they have to strategically set it up so when they're ready to exit, there is somebody to buy from them. Because there is no one to buy from them, there's no one to sell to. And they can't get out and they can generate profits and they can achieve.
Talking of which, there's something that's happened recently that I want to discuss with you, and we might as well do it live on this first show. Can you pull up a chart for Google, please?
Google.
Yeah.
The stock, right?
Yeah.
Okay, this looks weird. Let me stop screen sharing for a minute, and I'll just set up the trading view. That's why it didn't work, because I'm on a full
Guys
screen.
on Instagram, if you want the rest of this, you're going to have to watch on YouTube live. Thank you very much for tuning in, whoever tuned in on Instagram.
Yeah, I think Google had like a massive peak recently, if I remember correctly.
Oh no, something even more interesting has happened, which I'm going to discuss. I think they accidentally gave away when the market dip's actually going to happen. I don't think it's going to be in the first witching season. I think it's going to be in the second, which would throw everybody off. But yeah, when we pull it up, I'm just going to say a few things to you. And you're like, motherfucker. Before we even go to this chart, we all agree that Google is probably the smartest company on the planet. Like, yeah, Elon Musk is smart. Yeah, Bezos is smart. Yes, Apple and Tim Cook are smart. But Google is like the most, when it comes to information and attracting the smartest people in the world, like who wants to go anywhere but working at Google as like a developer, coder, whatever. Now, would you agree with that?
It's as high as you can get.
Yeah. So Google is currently valued at one point hit the 3,000 mark. Now they're about to do a stock split. They've announced a stock split. A stock split is where the price of the share basically, because it's too high, doesn't look attractive to investors. Even though all this is dumb because you've got fractional shares. So it just shows that it's all psychology. Now you can get, let's say, for example, if Google did a 3-to-1 stock split and the price was 3,000, this is how people got hella rich off Tesla, because they did a stock split of 4-to-1. Now, let's understand this. If they did a 3-to-1 and the share price was 3,000, anyone that held one share would now have 3 shares at 1,000. Cool. Google have announced they're doing a 20-to-1 stock split. Now, I was like,
that's just evil.
Yeah, I was like, that's
you got 10 minutes.
That's weird. Like, that's some shit's going on here. That's a red flag for me. That means some people are about to get hella rich and some people are going to get dumped on hard. So they've announced that this is going to happen in July. So I'm thinking, if there's a stock split and the price goes down to like 150 or something like that, the drop from 150 to 100 doesn't seem that bad. Whereas a drop from 3,000 to 1,500 seems horrible.
Oh, shit.
Because if a 50% dip is going to happen, you need to make that look as small as possible.
Yeah.
So I was like, why would they do that? And why would they not do it in this quarter? Why are they doing it in July? And this is the smartest company in the world. I don't think they're dumb. I don't think they're short on data on anything. So I'm just going to say from now, public, this is our first show of the technically speaking. Just based on logic, I'm going to say that I'm predicting a massive market crash, like full on crash, like the COVID one, after this stock split. Because it makes too much sense. And the reason it makes too much sense is because if you have an options trade where you have contracts for 100 shares and you buy them before the stock split, and you've got a 2024, 2023 call option, and then the price goes up from that dip. And then there's a stock split as well of 20-1. One of your contracts that has 100 shares has now multiplied by 20. You've now got 2,000 shares of Apple, but you're paying the price that it was 2 years before. That's
sick.
Nasty. So one of the things I'm going to be doing is I've been toying around with options contracts and with the on indexes, but I am most definitely going to be looking at how I can get an options trade on Google. A long one. I want like if there's a 4-year one, I want a 4-year one. Because even one contract of Google now, you end up with 20,000 shares of Google. Tell me that doesn't scream whale fuckery. Once you know their behaviors, you can't not see what they're doing.
It's everywhere. It's just everywhere.
So yeah, but again, it's one of them ones where it seems so obvious. I'm like, why is this not a red flag to anyone else? Why is the moment Google is doing a 20-1 stock split, something's up.
Yeah, because they will tell you, yeah, guys, this is so to make the price more attractive. Yeah, but why?
Yeah, why? Why are you doing that?
Why, if you can buy fractional shares and it doesn't really matter?
It doesn't make any sense. So yeah, that's that one. So I'm gonna do the last 5 minutes. I want to just kind of share my screen, and I want to show you something that I've seen recently. Thanks to blockchain backer. Let's go total free. So this is, for those that don't know, this is the total market cap of everything in crypto, excluding Bitcoin and Ethereum. Now, what was very interesting that I saw somebody do was they mapped in the, oh no, that's the extension, the fib extension retracement from here, and revealed something very interesting. What a coinky dinky that dip. Look where it landed.
Yeah, perfectly.
That is very interesting. Now, that would then suggest we then remove this and we do the extension. We went from here. Oh, and remember, guys, none of this is like completely accurate. We was meant to do the disclaimer at the start, but we'll do it at the end. Extension.
Disclaimer, not financial advice. And if you want to go around and play like an idiot, it's your fault if you lose money.
Yeah. Please do your own research. We're not financial advisors. We don't claim to be financial advisors. So just basically do your own research. Basically, everything we're telling you is a lie, and you're going to get wrecked.
Yeah, actually, the whales paid us to tell you this, so they can now do the thing they actually
do. So yeah, from what I've just calculated, that would mean, so my previous pump level was that we were going to go from wherever the low was to 1.49 trillion. But now this is suggesting potentially 1.74, and my ultimate to get out bit was 2.24 trillion. Because if we look from the last major pump, which was here, that was to there, it lasted 107 days and increased 172%. So 705 billion was poured in 107 days. So 172%. So if we did the same thing now from here, 172%, would take us around here, which is close to the 1.618. So let's just say it does go to the 1.618. That would be 1.756. This is where I'm thinking we're going to get to, which would mean an additional 1.14 trillion would be poured into crypto over the next 100 days-ish. So that would mean hella people are going to get hella rich if they know what they're doing over the next 100 days. So yeah, that is that. Thank you very much for tuning in, guys. I've been your boy, Mr. Hardin. This has been Mr. Spectacular. This is our TA show. Technically speaking, there's not like a designated time for it. It's just going to happen every now and again when either myself or Mr. Spectacular feel like going on the charts. It's mainly going to be Mr. Spectacular just literally jumping on the charts and talking about what he's seeing and what's happening in the markets, guys. So
yeah, and also I'll be dropping these short clips on YouTube and Instagram for market psychology tips to help you get out of this thing alive and hopefully in profit.
Hopefully. See you later, guys. See you in a bit. Bye.